Hey folks, LA Marzulli here for On the Trail of Nephilim and Questions with LA and UFO Update and all the different shows that we do. But you know what? The economy is getting really strange. I mean, how could you not notice it when you look at what's going on? So I got a great guest here. Bear with me, you're going to want to hear this, but first a word from our trusted sponsor. Did you know one of the leading reasons skin begins to sag and form wrinkles isn't necessarily because of old age, but because our bodies are missing out on essential collagen? Folks, we produce 10% less collagen every decade once we hit 30, and that's a major reason behind those pesky wrinkles. That's why, along with 10,000s of other people, we've all turned to this cutting-edge new substance to help reduce visible signs of aging. It uses the top 5 most researched types of collagen, which is essential for skin health, to support skin elasticity and skin hydration. The best part I love is you get 53% off for the rest of the month, or until they sell out, whichever comes first. Folks, get yours now by going to www.healthwithla. Once again, that's www.healthwithla.com, healthwithla.com. I promise you won't regret it. I take it every day. So I'm back again, and you know what, folks? Let's face it, and I know all of you go to the grocery store, and we watch the prices go up and up and up and up. And the United States is now at $33 trillion in debt. So the analogy I always use is a lemonade stand. So the kids come up and they're going like, well, I want to open up a lemonade stand. So, okay, we give them a couple of bucks and they get some lemonade and they sell the lemonade. And it's like next day they come in and go, well, we need a better table and some better props. And so, how much do you guys need? Well, we'd like to get $50. $50. Well, how much lemonade have you sold? But anyway, we hand over the $50 and they get a table. Next day they come in and go, if we only had money for advertising. Well, how much lemonade have you sold? Well, we sold $5 yesterday. So now it's $50 plus the number $200 for the advertising, but we fork over the $200 for the advertising for the lemonade stand. And the next day they come in, if we only could get a billboard advertising our lemonade stand, we could clean up. And of course, it just goes on and on. I mean, what parent would give the kid that kind of money? Well, welcome to our federal government. $33 trillion in debt, and on it goes. So I'm here. The guys from Noble Gold, folks, we've invested in it like crazy. They're one of our sponsors. So my first question to you is, when is this thing going to collapse?
Yeah, I mean, I think it's, when you're looking at the dollar and the markets, there's so many countries right now that are trying to go to these central digital currencies.
Right.
I was reading about, there's like over 100 countries that want to create their own digital currency. And, so much of a reaction of this is to what's happened with inflation with the dollar over the last few years. Before the pandemic, certain countries weren't happy with the dollar, and obviously Russia is not happy with the dollar because they are under sanctions. But in general, most places in the world, they would want the dollar over anything else, any other currency that they could choose from. But now, because we pumped so much money during 2020 to 2000, even now to 2022, 23, and now we have this crazy inflation right now. You're looking at inflation numbers, depending on who you believe, anywhere from 5 to probably 10%.
That's a lot.
A lot of items.
That's a lot, man. I mean, it really is.
And then you look at unemployment. And so, I always look at real unemployment, not and people don't realize the unemployment numbers, they take out people that are underemployed. So if you want a 40-hour week job and you're working 15 hours, in the unemployment numbers that are at 3.7, you're included in there. But if you're only working 15 hours or 18 hours, are you really employed?
No.
They also include disenfranchised workers, so people that just gave up. And then they look at anyone that didn't find a job after 4 weeks. If you look at the true unemployment numbers, you're above 7%. I think it's 7.1% at the last rating. So, that's the true unemployment number to me, right? Just because they can falsify the data and keep it at 3.6%, that's fine for people that don't look at numbers the way that I do. But if you're looking at a true unemployment at 7%, we would, if people looked at that number, they would say that we are absolutely in an inflation. We're in a recession now.
But there's no doubt. There's no doubt.
And we'd be looking at things a lot different. And then the Fed would probably they'd have some pressure to change their course on rates, which I think, these high interest rates right now are really hurting a lot of people. And I don't know where the sweet spot number is.
People can't buy houses. I mean, was reading reports. I mean, the housing
8%.
market is, yeah. I mean, when we took our first mortgage, we were tickled pink. I think we were at like 14%, 13%, and we were going, yeah, baby, and this is like 1987, so it's way back then. But I also had a spec house on the market under Jimmy Cotta, and interest rates were like, what, 21%?
20.
Yeah, and that thing just sat on the market for 2 years. No one was doing doodly squat. Yeah. I lost my shirt on that house. So it's let me ask you something, Colin, because I mean you're in this. I'm not a finance guy. I'm a content guy. So I rely on people like you to keep me, abreast of what is happening. I am really concerned to where we are with the $33 trillion debt. And then all the saber rattling from, if I can use that word, with the BRICS nations and the talk of they're already trading in other currencies in oil besides the petro. So there's already broken from the fold, as it were. Where do you think this thing's going to go?
Yeah, I mean, I think, really our country is strong when our GDP is growing and real unemployment is strong. And I don't think we're in a position right now where any companies, large scale companies, feel comfortable doing any mass hiring. I don't think raises are in the future. So you have a very, in the US, you have a very unique situation where I think this inflation number is going to stick around for a while. And I've been saying it for a long time. I think we should do away with the number of 2% for the Fed. I don't think it's a realistic number for them to hit unless they continue to pull out other factors to get that number down to 2%. I think they should raise it to 4%, because that's probably where they could get to reasonably. They could get to a 4% inflation number. But I think I would be very cautious right now in terms of looking at the markets and having too many eggs in one. I wouldn't have all your eggs in one basket right now, because I think that there are a lot of things that are in trouble. Real estate, LA is a great example. I mean, you're someone that's bought and sold houses, and you've seen, and you can really time it. If you have money set aside, you can time it and do really well. But right now, the thing that's scary, I think, is that you have these 8% mortgages on homes and prices haven't dropped. Maybe they've dropped 10% in some areas, but that's not enough. Mortgages are 85% more expensive than where they were a year and a half ago.
It's amazing.
In January,
just amazing.
2022,
right.
85%.
Right.
And areas we're seeing a 10% drop. Those numbers aren't going to equate. So I think that what people are doing right now is they're looking around at alternatives, and they're looking at different ways to make income. I think the gig economy is really happening right now. Anytime I get in an Uber or, I just talk to people, and those people, a lot of them have like a regular job, and then they're doing this on the side, and they're I talk to them about why, and they say, well, I want to start another business, or I want to invest, or I want to. So there are people out there that are taking this initiative. But I think the day-to-day normalcy of our economy in the U.S. and the strength that we've had, and how we were just kind of relying on this growth that we had from, forever. And, a lot of wealth was made in the 70s, 80s, 90s, and the early 2000s. I think this is the first generation, the young 20s and 30s. Most of them are going to be worse off than the generation before. There's always been a situation where every generation got better here in this country. And I think this is the first time that, unfortunately, that they're going to be in a worse position, and it's going to be harder for them. And a lot of it is, what's happening with the government. You look at in real estate is a great example. And I own real estate. And one of the things that they're really pushing for is they're pushing to put more people into cities. And the way that they're
Stack
doing
and
that,
pack. Yeah, I know.
doing
Right.
all this government funding,
Right.
tons of government. I mean, all these states have all this funding to build this housing, and they want to have low income housing or all these things that they want to offer. But if you look at the net cost to subsidize a developer, the developers don't even care really about the properties. They're making money just on the build. Whereas in real estate, in a normal free flowing economy, the developer would have to make money. If you're building an apartment building, you have to make money on the project to itself, right? Now they take the government funding, they make all their millions up front before they even build the project, and they don't worry about what the project does. If the project's just stale or they don't make much money on the project or the rents don't cover it, it doesn't really matter. They've made all the money up front. And this is a big problem with the way that our country is sort of starting to think about things, is that there's all these subsidies and all these things that we think is helping. But when you look at the net cost, I mean, you look at what California's trying to do with homeless situation or unhoused, and the hundreds of millions that California spent the most. And the irony is they've spent the most and they have the biggest homeless issue in the whole country.
It doesn't work.
It doesn't work.
It just doesn't work.
It doesn't, the scenarios don't work, unfortunately. And so this is the problem when you have big government coming in. And
Right.
even now, I go back and I talk about this a lot. So people will see me in interviews, they probably sick of hearing this, but I talk about the fact that I get calls every day for the employee credit from COVID. It's $25,000 per employee. I get a call every day. And I get a call from, and I can tell you this, because sometimes I take the call, they're ex-mortgage brokers that haven't been making money in the mortgage business. And now they're selling me to take this free money from the government of this $25,000, which I've never done and I never will. And it's so strange to me that a business owner today that survived the pandemic would ask for money that I could have needed 3 years ago. And it's because the government hasn't shut this down. And we're talking about, the amount of fraud that's going to come out over the next 5 to 10 years, it's astronomical.
And we see that almost daily.
Daily, you see
If you're looking
some guy
for
that says he had 10 employees and he had 2 employees and he's buying a Ferrari and he's jetting off to Europe, and then they catch up. But that's the ones that they catch, right? The flamboyant ones that are probably putting pictures of themselves on Instagram or social media. But what about the ones that stayed below the radar and just put that money in an account and they never really they had never really talked about it? There's going to end up being billions of dollars in ERC fraud, and it's because, let's just say you made an argument to keep your employees on and you pay them and you needed the money during that time because you couldn't do business. Okay, but that was a few years ago.
Right.
Now you're past that. You've survived. Right. And the reason I would never take it is, number one, I don't need it because our business actually grew. And number two, it doesn't make sense, even though I can take it now, even though I never have to think about it, I never have to pay that money back. I can take it now. They don't even really look at your books. They just give you $25,000. There's employers out there that can get $400,000, $500,000, $600,000, and it's just waste, right? It's just a way for me to get money, and then that broker that's calling me gets a commission. There's that money that all of us have paid in the system for because it all came from taxes. Mm-hmm. And now it's just another way. And people wonder why the cost of everything has gone up. The cost of all the sort of healthcare and everything that we're doing today, they're all wondering why this goes up, is because there's these programs that don't make sense. There's, fraud that's not getting reported enough. And so that's the big issue, is you have these big government initiatives that, in theory, there's probably 20 or 25% of the people that took that money and it went to the right place. And then you have a big majority of people that took it and they just lined their pockets with it, unfortunately.
Let me ask you something. I know gold hit 2,060 an ounce not too long ago.
Yes, correct.
And now it's down to 1845. So we see the gold market going like this. Silver today was $21. I look at it every day. I just check because I'm heavily invested in the gold market. I'm not, the reason why I went with you, and folks, this is, I'm just wearing it on his sleeve here, as it were. But the reason why I went with Noble Gold, you sponsor our show, was I've got bullion. I've got
Yep.
hard currency here. I mean, it's not currency, but I've got a hard asset. So even if it fluctuates, I mean, and I've watched it fluctuate like crazy. I'm still making a profit even right now on my investment with the gold. It was much better when it was $2,060 an ounce. I know
Right.
it's going to go back there. And the bottom line is, let me ask you something. I mean, now I would think this week would be a really good time to buy because I haven't seen it this low in a while. Your thoughts?
It hasn't been like this in almost 2 years. You're looking at today is an interesting day, for instance, because there was a sell off, and the markets day to day are so interesting. But like the government shutdown, they thought would last longer. They didn't know they put that deal together over the weekend,
Right.
and so the sell off today was market traders saying, oh, we were going to go into gold. We went into gold temporarily because we thought there'd be a government shutdown, and then they reversed course, and now they're getting into riskier equity investments. But that's for the day-to-day people that are doing it. That makes sense, and so you see that. But if you look long term, I mean, putting more money in equities right now in this kind of market where we're having. I mean, this is not the first government shutdown this year. I mean, this is happening multiple times.
Yeah.
I mean, for people that don't realize what's happening, I mean, we are literally getting a call, in essence, from American Express and Visa like 3 or 4 times a year as a country. And I'm using American Express and Visa, loosely, obviously, but our creditors are making calls, right? And to even dive in deeper, the credit card, talking about debt, the country's in debt, 33 trillion. The credit card debt in the U.S. is 1 trillion, the highest it's ever been. We've never had higher credit card debt, and who's doing great stock wise. I mean, not that I'm telling you to buy stock, is American Express and Visa are also doing very well this year. Because they're obviously making massive profit on the idea that more and more people are using credit card debt in a way that they shouldn't be using credit card debt. I mean, the idea that you're talking about $1 trillion in debt at an average percentage of 20 would be low percentage LA, but probably average in the 24 to 25% range in terms of what people are paying in terms of interest. So you have people spending way too much right now, well overspending on things they shouldn't be spending. Credit card companies are obviously profiting significantly. The country is overspending. It's a pretty bad situation. I think the only positive that I saw during COVID was that people actually paid down their debt. I think that was the only financial positive, was that we had the lowest credit card debt in, I think, like over 20 years
Wow.
during COVID.
I didn't know that. That's amazing.
Yeah, because people, you had some people that most people just said, I'm at home, my family, I got the things that I need. And they like hunker down and they stopped blowing cash on stupid stuff. And so people were paying off their debt in droves. And then fast forward 3 years later, and you would think, the government spent so much money and they put monies in people's pockets that people would be better off today than they were. But actually they were we had less debt, credit card debt and overall debt went down too. During COVID, individuals had less than they do today. So all that money printing, growing the economy, they grew our money supply by 18% from 2020 to 2021, 18% per year. So all that money flooding into the markets, it didn't help anybody. It didn't help the average person. It actually put them in a worse position. And that's the position we're in right now. And so now they're talking about potentially stagflation. They're talking about hyperinflation coming into, and I think in my opinion, we're probably in a stagflation period right now. I mean, the inflation is very high. I think unemployment is higher than what they report.
I agree. I agree with that.
And then the GDP, I don't think is growing that quickly. So, people are worse off than they were when they got all the subsidies. And that just thinking, if people take a step back and they think about that, is like, that's coming to an election year next year. They should be thinking about that cry, that idea of subsidies during like a really difficult time in 2020 actually hurt us pretty dramatically 3 years later. We're in a much worse position individually. Individual debt is at 24,000 per individual here in the U.S. Government debt's at 33 trillion, 1 trillion in credit card debt. I mean, you have to pay for these things at some way or another. And then, like you said, gold's sitting in the mid 1800s, silver's at $21. Platinum is below 900. Platinum is going to explode, in my opinion. And so what's going to happen to those markets if the prices keep going down? And I can tell you, because I watch it pretty exclusively, is that mining is going to drop. The mining community in many places all over the world, in Mexico and a few other places, they're on strike right now. They want a 30-40% increase, similar to the auto workers here in the U.S. So they've been closing mines. They've just said, forget it. We can't afford it. So you have Newmont and a lot of these big companies that have just slowed down and just said, we're not going to mine. So there's interesting things happening behind the scenes with gold and silver, platinum, palladium that I think is going to have an effect in a few years if people can kind of, read between the lines and see between the trees. They can see that in the future, these kind of things are going to go up a lot. And I believe in the next bull run in gold, I think we're hit 2,300, 2,400 gold.
Yeah, I can see it do that.
Yeah, silver definitely breaks 30. And then I think platinum is taking a lot of uses from palladium. They're using it in catalytic converters. So I think it's going to replace a lot of that usage. So I think platinum at the 1,400, 1,500 range is very realistic, because a lot of people don't realize there's a lot of uses for platinum that are happening, and it's much more expensive and difficult to find than gold, silver, and palladium.
Let me ask you something. We throw these numbers around. It's like a perfect recipe for a financial disaster. I'm going to play prophet of doom here. $33 trillion in debt. The petrodollar kind of like this even today. I mean, it's like, so what happens if this whole house of cards, because right now it is a house of cards, collapses? Right. Let's say, give us a scenario. What happens if the house of cards collapses? The entire planet goes off the petrodollar, which is a possibility. Definitely a possibility. Looking towards the yuan, looking towards the BRICS nations. It's already in place. We were energy independent just a few years ago. Now we're doing all this stuff with the Saudis again. It's just incredible. So let's say the house of cards collapses. What happens to gold and silver?
Yeah, I mean, I think there's a flight to safety. That's what I was talking about. What happened today is so interesting, is that, you have these micro movements where equity traders think there's an opportunity to get a little riskier. But I think long term that they have to move to safety. And the other thing we have, people don't talk about is, with what's going on in Ukraine. I mean, obviously we're even though we're in a war, right? So
no, we are.
You have all these things that we're spending money on that are costing our country a pretty significant price. And that's just going to increase our debt even further. So, you look at all these scenarios. So I think, I think people should look closely at the real unemployment numbers and see where those go to. Because my thinking is, if real unemployment gets to, 9 or 10%, that's our real unemployment numbers. Yeah, that means we're really in a full-blown recession. Whether the unemployment number that they report stays at 4.5 or 4.8%, that real unemployment hits that, 9, 10%. Then I think we're in a pretty bad situation. I think you'll see people move into other safe events. And then it's going to be, well, what's Powell going to do if we hit those kind of numbers? And so the only scenario that he could lower rates from what they say is if we're in some kind of black swan event, if something out of the ordinary happens, because if his mandate is to get us back to 2%, the only way he could go away from that is that the economy just is totally falling apart. So that's the only scenario that people would see us go back to lowering rates some. And then, I think that would give a little bit of confidence. I think the rates are just too high for the economy that we're in. And there's too many industries that are going to be affected directly. There a lot of corporations rely on debt. A lot of companies rely on debt. And, if a mortgage, which is the safest debt, is at 8%, to get a loan on a business, you're looking anywhere from 12 to 16%,
Yep.
or higher. Yeah,
Or
you're
higher,
right, or somewhere
right.
in that range.
Right.
So, those are pretty big. You're getting close to credit card numbers to take out a business loan. So, we're doing a bunch of things. Then you have the students. Their debt isn't going to be the government's going to get involved in that. It's like we have too many things as a country that we're trying to help and to pay off and to do all these things. And really, unfortunately, all the subsidy that we're doing is just creating more inflation day to day. And that's really, I think, Elliot, what you're talking about is that we're seeing this debt inflation bubble. And yeah, nobody knows where we're going to go with the value of metals, but I don't think I don't think the downside risk is really high, because you're looking at a scenario that these, gold and silver and platinum, they need these things in production. Silver is used in, so many industries out there, they have to use it. So they're not going to stop those uses. So it's really a matter of when it's going to hit. I don't know, but I can tell you this, and this is proven over time. Every bull run in metals is always very quick and very fast. The bull run in gold the first one we had, in 2001, right after 9/11, it was fast and furious, and it went on for about 8.5 years. So you do see these scenarios where the metals market will move fast. And when I say bull, we're talking 20% year over year returns we saw in gold and silver.
Yeah.
So, I would just be prepared to look at it and go, and it's funny for people that have been around gold for a while. We look at 1850 and 1860, and we go, man, if 5 years ago we would have thought we'd be at 2,500 by now.
Yeah, I agree.
With everything that's all the debt and all the money printing, but we're still sitting 1850, reasonable price. Silver sitting at $21. I think they're pretty reasonable prices to pick up some of these metals that are necessary. These are necessary metals. So we've seen a big shift at Noble Gold, where we're seeing a lot of younger people. It's quite interesting, because for the majority is people in their 20s and 30s, they're scared about what's going to happen, because they're kind of behind the 8 ball, unfortunately, just the way the economy is. But then you do see people. I've had a lot of old 401k rollovers of people that are 27, 28 years old. And when I started in the business, 14 years ago, 12 years ago, all through my time selling, I never saw anybody in their 20s buying gold. But I think there's a flight now to old school kind of conservative investments. So we're seeing a lot of much younger, Generation X or millennials, like young people getting in. So we're seeing a big change in obviously you have older people investing in gold, but we're seeing much younger people diving into the markets. And then Costco started selling gold. And so, that's great. People are asking about it. I'm like, it's great. This is the more that they're selling out there, more exposure out there in the market is great for everybody. And, I know in a year, a lot of those people that bought those Costco bars are probably going to be selling back to us, because, they're not going to have anyone to sell. And so they're going to come to us, and we'll buy back those bars. So it's a really interesting time in investing. And like you said, it doesn't look great out there, but I do think there's always a silver lining, and there's some opportunities out there if people are willing to learn and educate themselves.
Yeah, I would say that just from my perspective, I've invested, I don't know what it was, like a year and a half ago, something like that. And, we're still at profit because we bought it really low. And I'm not parting with this at all, because if things collapse, and again, I'm playing prophet of doom here, folks, but $33 trillion in debt, unemployment going through the roof, the homeless thing. And then you add the factor, which now people are starting to talk about, millions of illegal aliens. God forbid I use that word. But let's face it, the border is wide open. A Democratic governor in New York State, Hutchell, saying that, we can't take anymore. They got to go to some other city. Reality is starting to set in. And I'm all for immigration. Please don't misunderstand me, folks. But we need legal immigration. And you get millions of people coming into the country with no skills. They don't know the language, and I'm painting with a very broad brush here, but it's true. No skills, they're unemployed. Now what happens? They can't speak the language. Now what happens? So, in my opinion, we're looking at a formula with the 33 trillion, with the advent of illegal aliens coming in, with inflation being what it is. Just go to the pump and put some gas in your car. I went to Home Depot the other day. I had a $314 bill, and I'm looking like, well, what did I just buy here? I mean, I didn't buy anything, and I'm $314. The gas bill over $100 to fill up a tank. So it's the alternative to that is when we invest in precious metals, and I can't stress this enough. We got something solid. It's never going to go away. I mean, the dollar could completely collapse, completely implode, but gold, we've got something. We've got something in our hands, which no matter what happens, you've got value.
Yeah.
Your thoughts?
I recently spoke at a university about investing, a local university here, and they wanted to hear about precious metals, and they could not believe that you could actually hold an investment. I must have got three. What do you mean? You ship it? What do you mean? You could store it? I mean, they had never had anything of everything that they know is right here. This is everything that they know, and so I think that's the thing that people are forgetting. And you talk about oil prices, commodities, they flirted lower early, but I think to think that oil is going to get much cheaper, I think it's going to be rough, especially depending on how they allow oil to come in this country and what happens with the pipelines. But you have all of these things kind of adding up to a pretty serious situation. And I know, after 2008, 2009, we had that bull market in general for many years. And the bull market went years longer than a traditional bull market goes, right? A typical market is 7 to 9 years. We had it pretty good, I would say for probably 12, 13 years. But if all cycles and everything is equal, then in theory, normal recession is probably 1.5 to 2.5 years. But we had a bull market for 12, 13 years. And we spent a lot of money during that time period. And we're funding a war. So I think people should hang on and be prepared that this recession, and I don't care what they say, I'm going to call it a recession, that this is going to last 4 years. It's not unrealistic for that to happen. And so get used to these prices. Do I think home mortgages come down a little bit? Yeah, I hope they do. But don't be surprised if things stick in this range. If inflation sticks in this range for a while, be prepared for what it is. If it goes back and things open up, great. But I think you have to prepare for some worst case scenarios. And I think that's why people are looking at things like this right now, because they don't have to rely, when you buy a mining company, you have to rely on that mining company to have some profit. When you buy another company, you have to rely on how things are going. And I think a lot of companies on the stock market have a harder time getting funding. You're already seeing it in the VC world where it's harder to raise money. All that free-flowing money is not really happening. And I think that's going to really hurt the equity markets, because I do believe that if you deep dive more into a lot of the companies that have significant profit, a lot of it is based on them being able to borrow at cheap rates. And if they're not able to do that, which I don't think they're going to be able to, then I think the economy is going to be pretty rough for the next 3 or 4 years.
And I concur, which is why, once again, folks, noblegold.com, noblegold.com. And Colin, thanks so much for, coming on the record here. And there's just a wealth of information that you gave us. And I know people out there, it's like, you tune in for what I do, but this is really important. It's important stuff. And I know a lot of my audience is over 50, and I get that. And you're looking for something to invest. We invested in Noble Gold. I am glad we did. And I agree. I think it's, anything can happen, but, I know I've got my investment, and that's not ever going to go away until I sell. So I'm very pleased with it. I'll give you the last word, Colin. Thanks for coming on the record.
Yeah, no, thank you. Yeah, I'd say anyone's looking to learn about IRAs, old 401ks, they just want to get some gold and silver delivered, check out our website, Noble Gold Investments, or call say that you heard us on the LA show and mention the name and just call in. And we have live people, real people that you're going to talk to. I know you worked with Hope.
Yes,
And
yes.
she's the director of sales. That's the kind of person you're going to deal with. A stand-up person, believes in gold, owns a lot of gold and silver, understands the markets, but you're going to get.
She was great, by the way. She was really good.
Yeah, thank you. Yeah, you're going to get a lot of personalized service. You're going to get a person you can talk to. So we're no automation here with us. Real people sending you real metals delivered to your doorstep. And thank you for our partnership as always. And
Thank you. Really
great to be
appreciate the
on.
sponsorship. Absolutely. Yeah. We believe in it, and that's why we invested in it. There you have it, folks. And, we do these from time to time, and I think it's important because I know I said I'd give Kellen the last word, but let me just put a bow on it. You look at what's going on. If you've got money and you want to know what, to do with it, take a portion of it and check out gold, silver, or platinum. Thanks so much for watching. Remember to hit the little subscribe button on the end, and we'll see you back here tomorrow with another show. Folks, are you feeling unsure about your finances these days? Well, you're not alone. That's why Noble Gold Investments is here to help. Just hear it straight from the folks that they've helped. The Noble crew walk me through everything, no stress. With Noble Gold's help, I can finally sleep easy at night. And now this month, Noble Gold Investments is handing out a free 5-ounce silver American the Beautiful coin if you qualify for an IRA. Invest in gold and silver with Noble Gold Investments. Go to noblegoldinvestments.com now. That's noblegoldinvestments.com, folks. Remember, we've invested with them, and I am really glad we did. But number to call, 877-646-5347. Once again, that's 877-646-5347. We invested with them, and I'm glad we did, especially when we look at the trillions of dollars that the United States is in debt. If it collapses, you and I both will be glad we put some of our money into gold or silver.